Hello.
Hi guys. Welcome back to another series with Jujo. If you guys are not familiar yet, Jujo is a special series that KayaPlus started to just review apps or investment opportunities from the bottom of our heart without any sponsorship behind it, and give our thoughts and feedback to maybe help you guys make better investment or financial decision lah. Of course, this is the second episode, but let's recap what have we talked about in the first episode, Jumping.
Yeah, so we cover this new investment application called Raiz, which having a partnership with PMB. Basically, what they did, I won't go into details lah. I think probably you guys can check out the link in the description field. We have covered how the mechanism work for this investment application, and then what is it about? How can you join this application? Just click on the link, check out our first episode, then you should be able to have a clear view on it. So I think today focus is more on what is the thing that you're investing behind the scene. Meaning when you invest into this, they must be covering some fund, and then underlying the fund, there will be a couple of investment strategy. What is the field they cover? So today we'll talk about what are you really investing into if you are the investor of this investment app lah. Yep.
Okay, cool. Thank you, Chumbeng, for just giving a very brief introduction. As he mentioned, it's probably very true. So when you invest into something, be it a fund or be it an app or whatsoever, there'll be someone taking your money and then investing on behalf of you. And then if the investment is successful, then you will see your returns. And if the investment is misperforming, of course, you would incur losses. So as investors, this is quite a famous app. It has been making a few news headlines in Malaysia. So why not we just take our investor skills and put it into good use and just show to everyone what is Raiz investing in, and is the projected and historical returns up to your appetite and expectation. So a bit disclaimer, we are going to be showing information from ASN fact sheets from the funds themselves. By all means, it is not a suggestion for you to buy or sell. It's just basically for educational purposes, and just make the public and audience much better informed to make better investment decisions. So by all means, we just proceed. So yeah, when you actually sign up for Raiz Investments, you will be prompted by allocating your portfolio into three different styles, namely conservative, aggressive, and also moderate. So depending on how adventurous you are, how big your risk appetite is, you can actually tweak your preference setting. And if you are on the so-called aggressive side, of course, you can see here the breakdown. Equities would pick up a large chunk of your portfolio. If you are more on the conservative side, then of course they have this fund called the Sarah fund. So later we will take a deep dive into what are the components of the equity funds, the Sarah funds, and also the inbound funds. Chumbeng, anything you want to add on before we proceed to the portfolio breakdown?
Yeah, I think like we share on the first episode, basically you don't need to choose your portfolio if you go through some of their assessment provided by them. But of course, if the result is conservative but you want to be aggressive on this application, of course you can choose your preferred portfolio. But ultimately, this is the three portfolio that you will be entering into. So you have conservative, which is more towards the Sarah funds, 20%. 80% will be on the Sarah fund, while the aggressive side is more into equities. You can see ASN Equity 3 fund will be covering 80% of it. And then you have the moderate, which is using another fund source, which is called ASN Inbound 2 fund. So I think without further ado, we will zoom into the first fund that if you're investing into this Raiz application, and let's say you choose aggressive portfolio, this is the main fund that you will be investing into. So maybe Jupan, you want to cover a little bit of this?
Yep. Okay. Sure. So ASN Equity 3 is one of the components that made up the conservative portfolio and also the aggressive portfolio. So if you are on a conservative, this fund will take up 20% as per just now the breakdown. But if you are on an aggressive rise investing portfolio, this will take up a huge chunk, which is 80%. So as the fund name suggests, it's mainly on the equities. This fund portfolio will focus heavily on equities, particularly Malaysia equities. Later, we will zoom down what are the holdings as of the July 2020 fact sheets. But just to give you guys a brief outlook, how the fund has been performing, you can see at the top left, top portion of it, we actually snapshot the fund cumulative returns and also the annualized returns. So if you see 10 years, the fund has actually delivered around 46.74%. That might be a little bit too hard to gauge. But if you were to look at the right side portion of it, when they provide the annualized return, 3 years negative 0.214%, for 5 years is barely at break even. But if you look at the 10 years performance, it's at around 3.91%. So personally, I would say that it's a conservative kind of equity. Within 10 years, you definitely get 3.91% of return. And if you were to versus it against the benchmark, which they provided, which is 80% of the FBM 100 and 20% of the Maybank 12-month fixed deposits, definitely it is outperforming by 1.8%. So, but as you can see, the total growth in the graph chart below, it has been coming down because, as you all know, the stock market have tanked a bit due to the current COVID pandemic issues. But of course, if you are a firm believer of the Malaysian economy and also the Malaysian growth stories and typically how equities have performed over the long run, this might be an opportunity for you to actually grab hold of this opportunity to actually double down on the Malaysian equity so that you will see a further upside 5 to 10 years times down the road. Jumping, anything you want to add on?
I think the first question I have when I look into this, because this ASN equity fund make up 80% of the aggressive portfolio. But when I compare this side by side with all the three funds, later you guys will have the details. Maybe ASN Equity 3 is not the top performers, but how come or why Raiz Invest application will choose to allocate 80% of it to the aggressive portfolio? I also cracking my head at the first glance. But then when I zoom into their portfolio holding and all those stuff, I think maybe I can see a reason why, but I may be wrong. As you can see, the top 10 holdings, they're covering TMB, Popular Banks, Maybank, and so on. If you zoom into the allocation by sector, the top one is actually on financials from the financial sector. I think I interpret this way. To be aggressive, you need to seize for the opportunity when they are slightly on the downside, and then you can see a higher returns in long runs. And then I think one of the biggest impact due to pandemic in the past few months, I think surely you can link to financial institution because of the initiative run by the government called moratoriums. I think financial, all the banks are heavily impacted, and it has been reflected if you check out the graph that we have shared in the previous slide. Huge dip in the month of March or April. I think this is the reason why they maybe can see that they have growth potential in the next few quarters or next few years. Probably this is the reason why when you go into Raiz Invest now, choose the portfolio of the aggressive mode, they probably project that financial will rebound much stronger in the next few years. But then, of course, aggressive come with high return, potentially with higher risk as well. Imagine it didn't come back, then probably your return might not be as good if you choose to go with other portfolio types. Any things you want to add, Chupan?
Yeah. I think you basically covered pretty much of the section when it comes to the portfolio breakdown. As we all know, you can see the top 10 portfolio. These are big companies in Malaysia. Even some of it is government linked also. So definitely there won't be any huge, big or detrimental impact to this company, you look at companies like TNB, which is the sole national energy grid provider company, and you have the three largest banks there: Public Bank, Maybank, and CIMB. Top Growth, which is of course performing fantastically during this COVID-19 pandemic times. Sun Dhabi, one of the biggest plantation companies, Axiata, telco companies, Dialog Group, and Petronas Chemicals, which is in the oil and gas sector. But I think they are on the mid to downstream part of it. And of course, you have LBI Capital Berhad, which is an insurance company. So the weightage already suggested that it's skewed heavily to the financial sector. Then again, this is a portfolio that time to time the fund manager would adjust and allocate it accordingly due to different kinds of reasons. But I think as of the current July breakdown, you can see that PNB is actually positioning their equity funds to be more financial sector centric, which in the long run would be a very wise thing to do lah. So yeah, after we touch on the most aggressive part, which made up 80% of the aggressive portfolio and 20% of the conservative, now we go to ASN Sarah one, which is the 80% of conservative portfolio and also 20% of the Sarah, 20% of the aggressive one. So you can see here suddenly out of the blue, especially the latest 6 months performance from December 19 to June 2020, the gap has been big versus the benchmark, particularly because this is a very, I would say, defensive portfolio. Later we will drill down further to see what is the portfolio breakdown. But if you look at the annualized return, you're doing around 6.11% 10 years time, which is higher than 5 years by quite a lot. Because again, this portfolio is more bonds and money market fund centric. And during bad times, usually bond markets are the ones that are reacting inverted against the equities. So you have to really understand, in a bullish market, equities market goes up, your equity funds or funds that invest in equities will definitely go up in tandem, while the bonds will go down. And in bad times, bond funds are the ones which is going up lah. So as you can see here, very straightforward, bonds contribute to roughly 54.74% in your ASN Sarah 1 portfolio. And of course, you still have some equities component inside there. Your Maybank is there, your TNB is there. But of course, comparatively versus your aggressive portfolio where you have your ASN equity, you will see a lot of companies not there. So these are the so-called cash flow wise and performance wise, they are much stronger. They also contribute a bit on the ASN Sarah portfolio and also holdings lah. So Chun Bing, anything you want to also top up, or what are the special things that you managed to see and would like to share with our audience?
Yeah, I think it's quite logical when they talk about a conservative portfolio and then they link it with bonds. I think it's quite straightforward approach that taken by this Raiz Investment app. But of course, I would be very interested to see how they optimize the portfolio along the way based on your appetites. So whatever we shared here is true as of today, which is 16th of August. This is how they position themselves with the portfolio allocation for the user. They might change in the future, like we have shared in the ASN Equity, which is they put it in the aggressive portfolio. They think financial institution will perform better in the next few years. All these things might change. So we should also monitor what is their strategy behind when they talk about all these plans, whether they react to the markets or react to the market economic outlooks. All these things is important when you talk about something like robo-advisor kind of investment that automatically optimize the portfolio. I think we can move on to the next one, which is ASN Imbang 2. They contribute 100% of the moderate fund. I think it's quite straightforward. Probably Japan, you want to take a quick cover on it.
Okay, sure. So of course, ASN Imbang 2 funds will be the last fund components that actually complete the entire Raiz Investments kind of investment portfolio when they allocate your money should you choose to invest in a conservative, moderate, or aggressive portfolio? So as the name suggests, also imbang means balance. That means you have an equal weightage of risk and also equal weightage of protection when it comes to managing your investments. So if you also look at the investment returns cumulatively for 5 years, 10% plus, 10 years is 58%, but look at the annualized perspective, you're making around 4.73% on an average 10-year basis. So if we were to just neglect the current OPR rates that your fixed deposits is generating, I would say that there's slightly outperforming your fixed deposits by a bit. And this is what imbang or a balanced portfolio actually brings to you. Basically, you don't have major downsides during a pandemic or crisis time, but you also will not see double digits or higher single digit returns in your portfolio. So when we move into the portfolio top 10 holdings, you can see that you have, again, our national grid energy provider, TNB there. You have Public Bank, you have Top Glove, Maybank, and you also have your bond component there, which is the bonds issued by the government of Malaysia, LPI Capital. And you look at the so-called breakdown, bonds takes up 35.64%, so it's 20+% lesser than your Sarah fund. And here you also have a huge dependency on financials, healthcare, and also other companies listed, inclusive of IT, consumer staples, and whatsoever. So instead of dipping your hands into equity funds and those Sarah fund 50-50, basically what ASN did, that they also have this already stabilized or balanced portfolio, which they can include straight away into a moderate Raiz investment kind of appetite. So Chun Bing, anything you want to top up when we just round out the 3 funds that ASN has provided for Raiz Invest?
I think it's quite straightforward, the approach or the strategy they try to do for different portfolio, be it conservative, which more towards bond. I think it's quite straightforward. Moderate, I don't think we'll cover in today, because the fund itself is already meaning, as in already imbang by itself, which means balance. And then what I'm more interested is the way they shape the aggressive portfolio, whether it's a true investment strategy that will draw in good result in the future. Then that one can be a question mark. But then ultimately, one key takeaway with this Raiz investment app is you are taking your investment into this country called Malaysia, our own country. All the portfolio they are investing in, I think, is built out by the Malaysia company or bonds and so on. So, of course, it will do slightly better if compared with FD and so on from the performance that have been shared by the fund sheet. But then, like we have shared in the episode 1, I think if you wanted to participate in the international markets, the growth story of tech stock in Nasdaq or whatnot, probably this is not the fund that you can go to, or this is not the application that you can go to. But if you are a strong believer in Malaysia markets, and then also you like the mechanism on how this investment application did, which is turning your small change into saving automatically, and then have a auto or how to say, the optimization mechanism behind the scene. I think this is an application for newbie, as in the new guy in the investment field can try it out. But if you wanted to draw for higher returns, and you have time to do more study and whatnot, probably you should go for something that can do much higher result. I think this is the key takeaway that I have.
Yep. So yeah, I think you basically highlighted all the so-called major pros and advantages of starting off with Raiz Invest. Raiz Invest is definitely for someone who, as the app or the founders of the app highlighted, is for someone who really finds it difficult to actually save money to start an investing journey. And this is one of the very good initiatives, which is just to round up a few cents or even a few ringgits in your purchases and then convert it into a seed fund. And this seed fund will slowly accumulate gets invested into blue chip companies, partially also into bonds, depending on your portfolio, and it will grow definitely. And of course, looking at the breakdown of it, you have an aggressive one, you also have a conservative one, or you have a middle one, which is balanced. But ultimately, if you look back at the historical returns, which might not be what the future returns is, but it is a good projection of it. So if you are not happy, or if you want to look at higher returns, of course, the risk of getting into higher risk investments, which is to just DIY yourself, you might also see huge fluctuations. So it's really up to your personal risk appetite. But what we really think is, if you really find it hard to get started, Raiz Investing is one of the best ways to get started into investing. And as you slowly build up your knowledge, build out your competency, and build out your understanding on how to read annual reports, gauge the market macroeconomic outlook, then you can slowly progress into doing DIY investing, which is what mykayaplus is all about. But that doesn't mean that we don't also encourage people to start off with funds investing, which is also a huge proponent when it comes to compounding and building wealth into everyone's personal risk appetite lah. So anything you want to top up, Juming?
Yeah, I think we probably can end the session. Hopefully, we share something interesting, or more informational to you guys. I think if you guys are interested to enter into DIY investing mentioned by Jupan, probably you can check out our website, mykayaplus.com. We are doing quite a frequent updates on a weekly basis. It covers investing insights, which is some of the investing strategies or whatnot that we think it works for us, and we wanted to share it with you guys. And also, we do quite a frequent update on stock analysis, covering different markets. Currently, the key market that we're in is still in Malaysia, because we are both Malaysian. And then regularly, we also cover stock from Singapore and US. I think eventually Japan is working hard to cover tech stock, or any stock from Hong Kong or China. I think all these things we're trying to create a bank of stock stock analysis in our website. Just follow our page, you'll be seeing our analysis on a weekly basis.
Yep. And of course, if you also guys come across any new investing apps or opportunities that you might not understand, and you need someone to actually honestly tells you what it does and what is the returns like, and does it really suits and complement your risk appetite, drop us a comment in our video. We'll definitely look through it, and then we'll do a similar kind of series where we review and share with you our thoughts. So I think that's it for today. Thank you for watching, and see you soon in our next JuJo series. Bye-bye.
Okay. Bye.